Hello and welcome to Perspectives on the Voice of America. I'm Dimyake Mwakaliele. The U.S. government has agreed to provide an $85 billion emergency loan to rescue the world's biggest insurance firm, AIG, the American International Group. The Federal Reserve Board authorized the loan late Tuesday with the support of the Treasury Department. The Fed said it determined a disorderly failure of AIG could add to already significant levels of fragility in financial markets. AIG was on the verge of collapse due to major losses in the housing crisis. Earlier this week, the mortgage and credit crisis led a major U.S. investment bank, Lehman Brothers, to file for bankruptcy. Central banks in Europe, Asia, and the United States put billions of dollars into financial markets Tuesday in an attempt to keep the global economic crisis from worsening. U.S. stock markets moved up strongly at the close, recovering some of the ground lost in Monday's steep declines. Trading in Asia is mixed today. The markets closed higher in Tokyo, Taiwan, and Seoul, but Hong Kong and Sydney are lower in early afternoon trading. On Tuesday, market indexes around the world were down sharply for a second day. Many markets plunged Monday following the collapse of Lehman Brothers. Late Tuesday, British bank Barclays agreed to buy parts of Lehman Brothers for $1.75 billion. Key stock markets in Japan and Hong Kong Tuesday lost around 5% of their value. Russian officials suspended trading on their main stock exchange after prices plunged more than 10%. And major European stock indexes were sharply lower at the close of trading. Now, joining me in the studio to discuss the latest news about world markets and the possible effect on Africa is VOA economics editor Jim Randall. Welcome, Jim.
Good morning.
This has really set a lot of people on edge trying to understand what is going on. When you hear companies like Fannie Mae having to be bailed out by the federal government, what is going on? What happened?
Well, mostly it's a crisis of confidence. People lost confidence, and the reason they lost confidence is that a lot of mortgage lenders lent money to people they should not have. And not surprisingly, many of them couldn't pay it back. And that doesn't seem like a big deal. But what happened was, the way mortgages work is, I get a loan to buy a house, you get a loan, 1,000 other people get loans to buy a house, and then an investor comes along, bundles those loans up, and then resells them to another investor. And when things work as they usually do, then this security, this mortgage-backed security, has relatively high return, say 5-6%, something like that, and relatively low risk. The problem came when they started lending money to people who were a higher credit risk, and they charged them a higher interest rate. And they charged them a higher interest rate because there's a possibility they couldn't pay it back. Well, some people in the industry let their greed overcome their common sense, and they saw, oh, higher interest rates, so they pushed these loans out and merchandised them and passed them along. And when some of them did go bad, they were not prepared to pay them out. So anyway, it's a crisis of confidence growing out of bad decisions made by lenders.
Now, let me just break in there for a second. The ripple effects of this, of the crumbling of this market, I guess, is all over the world. We're hearing how it's impacting Asian markets, European markets, even Australia. What about in Africa? What is the potential problem there?
Two things. First, confidence. The biggest stock markets in the world, in the United States, if investors are very worried about these markets, then other investors in other markets are going to maybe hold back. Maybe they won't be confident that they can invest money. Maybe they're afraid that either they won't make much or they'll lose their investment, whatever. They're going to be reluctant to put money in any market. And so with less money going into a market, there's less demand for stocks. And when there's less demand for something, the price goes down. So you could see, sort of guilt by association, you could see African stock values going down. The second thing is, in the past, a lot of money came out of equities, out of stocks and was going into commodities. And many commodities are very important in many African nations. I mean, oil in Nigeria, and coffee and cocoa and copper, things like that. With money coming out of equities and going into commodities, the prices have gone up. They've hit records. And if this crisis of confidence in the stock market gets resolved, which probably will happen eventually, then money is going to flow back out of commodities. And
so you're saying there is hope it's going to stabilize?
Well, I certainly hope so.
All right. Well, thank you so much, Jim Randall. I think you summed it up very, very well for us. And now a programming note. VOA TV is pleased to announce a new program coming your way on October 6th called In Focus. Healthy living and perspectives will now be a part of this new magazine show, which will also include African news, features about America, sunny side of sports, and much more programming you've come to expect from VOA TV. Call or write your television station to make sure In Focus is part of your day. And as always, you can contact us here at VOA TV, Africa TV at voanews.com. Hope you'll join us for In Focus. That's all from us here. Until tomorrow, I'm Dimyake Mwakalialia for the Voice of America.